Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Ethereum in its token ETH. None of the content is financial advice. We'll start with the machine learning based price forecast, regression analysis, and accumulation targets. Over the last couple of months, ETH has had a favorable rally from its recent lows that it created at around at around $1,500. From that level of support, token has rallied back to essentially back to this ascending green line, which it held as support for the most of the bear market and recovery up until late February 2025. From that point, there was a breakdown, and now it's trying to come back to this green line. That green line right now is coming somewhere at around $2,900. The price is at around $2,800. The price has broken out of the 20-week simple moving average and the 21-week exponential moving average based resistance. It has held that level as support for 1, 2, 3, 4, and now potentially 5th week. So you could say that ETH is in an uptrend. You wouldn't be wrong by saying that. Again, if you look at the Bitcoin versus ETH risk right now, Bitcoin is slightly higher risk than ETH, but both of them are between 0.4 and 0.6, that is in the moderate risk regimen. If you focus solely on ETH over here, you can see the last time ETH was slightly in higher risk at around 75% or 0.75 risk was in March. In December, risk was lower even though the price was essentially same at 0.63. And you can see over here, ETH on its USD pair had a triple top essentially from March, then again in May, and then back in December around that 4K level. So that's one key level to watch. If that level this time around does not hold that much of a resistance, then the next target for ETH is that 5K level, close to that previous all-time high. And if it were to overshoot that all-time high by some fair distance, the next target is at around 7.5K per the Fibonacci levels. Per the machine learning model, though, without any euphoria in the market, the next 6 months, this yellow line, which is the bull case without any euphoria, over the course of next 6 months, the ceiling estimated or forecasted by the seasonal ARIMA, LSTM, and XGBoost based machine learning model trained on the weekly price action of ETH since November 2017 says that without a euphoria in the market, the price ceiling could be somewhere between 3K and 4.6K, so slightly higher than the December and March weekly highs at around $3,800, but not higher than the previous all-time high. Again, it goes really close to the weekly average all-time high that ETH achieved in November 2021. Although the all-time high was at around $4,800, the weekly average price for that week was slightly under $4,700. So without euphoria in the market, that the price target per the machine learning model is around 4.7K for ETH. If there is a 2 standard deviation or a euphoria case for ETH in the next 6 months, the ceiling for ETH's price action predicted is between 3.2K. That means right now for this week 3.2K is the ceiling, whereas towards middle of November of 2025, that ceiling is at around $6,600. Again, this model does not cover till the end of the year of 2025. This model looks only 6 months out into the future. From today till mid-November of 2025, the ceiling established is at around 6,600. If it were to have a blow off top in that regimen, the 3 standard deviations ceiling for ETH is at around 9,000. So again, this time around, again if the rally continues till about end of December of 2025, the ceiling could be somewhere close to that 9K level with a blow off top sometime in the last quarter of 2025. But my interpretation of the model, again, not financial advice. If you are interested into following these price target week by week, this is available in the tabular format also. So for example, September 21st, the base case is at around 3K. There is a 68% chance that price is uh, under that $4,200 target. There is 95% chance that the price is under that 5,600 target, and 99.7% chance that prices are lower than 7.5k. So that's how we interpret this model. If you look at the regression based fair value, again we made several videos related to ETH, since in that regimen where the price was not just lower than this pink line, which is the regression based polynomial regression based fair value for ETH. Again, ideally whenever the risk is one standard deviation, or the price is one standard deviation residual applied to the bottom, that is this green line, when the prices are outside this green line to the bottom, like they were back in June 2022 till about February 2023, that's per my interpretation of the model, that's where the accumulation zone for ETH exists. Again, this was the case, similar case was there in March and April and early May of 2025, and we made a lot of videos related to ETH. Again, Uni was our yesterday's videos, but you can check. This is the homepage of the YouTube channel. Again, we made a lot of videos when ETH was much lower than what it is today, 9 days ago, 2 months ago, 3 weeks ago. So if you're interested in following this regression and machine learning and AI based outlook to analyzing cryptocurrencies, you can give us a like and subscribe to, and also check out cryptoweeklies.com. All of the content on this website is available for free. You don't have to pay or sign up for anything. And again, thousands of hours of effort behind making these models and maintaining them at a daily level. Using this approach, again identifying what is a theoretical bottom. If there is a correction in the market, this green line right now is at around 2372. That could be a key level to watch if there is a cool off in the market. The fair value for ETH per the model is at around $3,800. So in the post-halving year, again you can see prices not only again, for example, if you take 2021 as an instance, prices in 2021 did not even look back or check back to the fair value, since again you can see this is since December 2020 till about May 2022. The entirety of 2021 and almost half of 2022, the prices were above the fair value, which is this pink line. This time around though, in the post-halving year, at least the first half of the post-halving year, majority of the post-halving year is spent below the fair value. So if that is of any indication, this time around again in 2021 the prices did not just go above the fair value, but one and also two standard deviation above the residual applied to the fair value, that is this 95 percentile ceiling captured by this orange line and the 68 percentile ceiling captured by this yellow line. This time around, per my interpretation of the model, as well as looking at some of the diminishing return as well as asset maturity, the likelihood of the price reaching the orange line becomes thinner and thinner. Again, right now that orange line is at around 10k, but again 6 months into the future this orange line could be at around 15k. And again, that is just extrapolating the behavior and the shape of the regression function. Again, extrapolation is not that useful, but again at this point this is the live model. So predictive capability of the regression function is not in this model. There is another model that I will share in this video after we discuss this model. The $6,600 is that one standard deviation residual applied to the fair value. That is I think a more noteworthy line. Again, you can see this time in 2024, again this bull run which began in 2024, the price has tagged this yellow line 3 times and has met with a significant resistance at this point in time. Back in early 2024, this yellow line was at around 3.5k, at late 2024 at around 3.9k. Now it comes to about the point at around $6,200. That's where the 2 standard deviation machine learning based price forecast is also at that point. So again, an area of confluence. And if you extrapolate this line for 6 months into the future, this is where that 1.618 could meet that price action at around 7.5k. So that's a key level to watch for ETH. If it were to go to that 7.5k level, that could be an area of confluence for major euphoria or distribution occurring at that level. Based on how we get there, the DCA model, which again takes cue for the same regression based function that we just saw, instead of applying to weekly candles, this is applied to daily prices for ETH, and per the relationship between the price and the regression function, the risk levels are calculated. You can see this model did a phenomenal job of identifying the bottoms. You can I'll just get rid of this regression lines for now. And if the hypothesis is only to DCA ETH whenever it is less than 10% or 0.1 risk, this model did identify the June 2022 bottom and till about the weakness in from October 2022 till January 2023, as well as April 2025 bottoms, where this model identified that accumulation phase for ETH where risks are very low. And again, if you want to be slightly more optimistic, whenever the model says has figured out risk is less than 20%, again, not the worst accumulation zone for ETH. Again, if you have to elongate that accumulation zone, right now we are in that similar risk regimen where the risks are less than 20% per this model. If they were to go to that intermediate territory, which again is a non-euphoria bull run peak for ETH, you can see over here in this dark green color when the risk levels are between 0.4 and 0.5, that usually ETH visits when it's at a crescendo of a non-euphoria bull run peak rally, like it was in March, June, July, and as well as this December, January of 2024. If the prices were to go to that risk regimen, the prices could be somewhere between $4,800, again close to that previous all-time high that ETH achieved at around November 2021, $4,800 to $5,700. That's the non-euphoria bull run peak for ETH at this point in time again. And this model can be extrapolated 6 months into the future. Again, the fair value, if the shape of the regression function stays the same towards the end of the year, could be at around $9,000. What remains a key valuation to look for ETH is this dotted two standard deviation regression line, especially when we use it in context of this DCA model. The dotted red line, that's where the major resistance has been met with ETH again back in March and December of 2024. That two standard deviation ceiling was at around $4,800 in December and $4,300 in March. Now it comes at around $8,200. So that could be a key level to watch. Again, there is a high chance that ETH does not go beyond this dotted red line, especially looking at how close this dotted red line identified the 2021 peaks with maturity to the asset. Again, as asset matures and market cap grows, getting those highly overvalued phases might not be that realistic, but nonetheless this model does identify as the prices go to that non-euphoria bull run territory, that they usually signal some cool off in the market. Again, not financial advice. The bottom regression one standard deviation line again identified this green line. Did a great job in identifying the accumulation phase for ETH, where the prices are sufficiently close to that dotted green line. Does not have to be below the dotted green line. Very few instances where price goes below the dotted bottom regression line, but nonetheless that holds a significant area of support at around $1,800 level if the prices were to cool off in the remainder of the year. Again, these models are available for free. You can utilize them or critique them if you want. The time weighted average price model did a great job again in identifying the April 2025 bottom, where the price was below the blue line, which is the time weighted average price. This you can understand, try to make it more easy to understand, is this amount of time the time the asset has spent at some of the key price levels and accumulating below the time weighted average price, especially for high quality assets such as ETH, for example. Definitely not the worst idea. Again, if the asset has a future, accumulating below the time weighted average price, if the market presents that opportunity, it's usually a good time. Per this model right now, the risks are slightly at a midpoint at around 50% risk. Overall, if we were to look at the estimated bull run peak using the three risk based model that we discussed for ETH, the overall estimated bull run peak is at around $8,800 as a confluence between the regression, time weighted average price, and the simple moving average price based risk, representing a reward of about 3x from the current price of about $2,700. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.